Vomma, also known as Volga or volatility of volatility, is a measure of the rate of change in an options vega with respect to changes in volatility. It is one of the Greeks that options traders use to assess the risk and potential return of an option position. Vomma is considered a second-order Greek and less widely used than others like delta, gamma, theta, vega, etc. However, it's still an important concept for options traders to understand as it can provide valuable insights into how the volatility of an underlying asset affects an option's value. What is Vomma? Vomma is a Greek letter that measures the sensitivity of an options vega to changes in volatility. It is typically measured as a percentage and represents the change in vega of an option as a proportion of the change in volatility of the underlying asset. Vomma is positive for options that have a positive vega, and negative for options that have a negative vega. A high positive Vomma indicates that the options vega will increase at an increasing rate as volatility increases, leading to potentially larger profits or losses. How is Vomma calculated? Vomma is calculated by taking the second-order derivative of the options value with respect to the volatility of the underlying asset, similar as vega. The calculation of Vomma is considered more complex compared to other Greeks, as it requires a more advanced understanding of mathematical finance and calculus. How options traders can use Vomma to their advantage. Options traders can use Vomma to gain insights into how the volatility of an underlying asset affects the value of an option, which can help them make more informed investment decisions. For example, if a trader is considering a long call option position and wants to know how sensitive the vega of the option is to changes in the underlying asset's volatility, they can use the Vomma to estimate how the option's value might change under different scenarios. Another way options traders can use Vomma to their advantage is by using it to predict changes in the underlying asset's volatility. For example, if a trader believes that volatility will increase in the future, they can buy call options with a positive Vomma. If volatility does increase, this will cause the value of the options to increase at a faster rate, resulting in a potentially larger profit for the trader. Options traders can also use Vomma as part of a hedging strategy. For example, if a trader holds a portfolio of stocks and is concerned about the potential impact of an increase in volatility on the value of their portfolio, they can buy options with a negative Vomma as a hedge. This can help to offset any potential losses in the stock portfolio if volatility does increase. It is worth noting that when using Vomma as a strategy, it should be considered along with other Greeks such as delta, gamma, theta and vega, to get a better understanding of the overall risk and potential return of an options position. Additionally, it is important to keep in mind that option prices are influenced by multiple factors, Vomma being just one of them. Trading decisions should be based on a variety of inputs and not just on a single metric. In conclusion, Vomma is an important concept for options traders to understand as it can provide valuable insights into how volatility affects an option's value. By understanding Vomma and how it impacts your options trading, you can make more informed investment decisions and potentially improve your profitability. Whether you are a trader looking to profit from changes in volatility or an options seller looking to generate income through the sale of options, understanding Vomma and how it impacts your positions can help you make more informed investment decisions. Additionally, it can also help in identifying the volatility risk of the underlying asset, and thus giving more insight into whether to sell or buy volatility, which can give a strategic advantage. Keep in mind that Vomma is a less widely used Greek, but it can still provide valuable information when it comes to volatility, which is a crucial factor in options trading. If you enjoy our content, don't forget to like the video and subscribe to stay up to date with market news. Thanks for watching, and stay informed.